Hello and welcome to Money News on Newsmax TV. I'm John Bachman. Joining me right now via Skype from Fort Collins, Colorado is Michael Carr. He's the Chief Investment Strategist with Street Authority's Maximum Profits. It's good to have you with us, Michael.
Thank you, John.
All right, so it's been a crazy week on Wall Street for the financial markets. As the government shutdown took hold, the debt limit approach, stocks took a huge hit, but then bounced back when everything started to look like the fever was breaking in Washington. But this week was also a big week because it kicked off earnings season for the third quarter. So let me ask you, which do you think will have more of a long-term impact on the market and where it's headed? At least, I guess just to say, in the near future as opposed to the long term. Corporate earnings or what's going on in Washington?
I think earnings are going to have a big impact as investors start reading through the reports. We already have a few big ones out with Alcoa coming early in the week. And Alcoa is just a commodity producer. They make aluminum cans and they beat expectations. That means consumers are buying a lot of stuff in cans, and that's a good sign for the economy.
Yeah, Alcoa also produces aluminum, which makes things like aluminum siding, which is important for the building industry as well. So that's a definite sign there that there is some optimism in the economy, correct?
That's correct, and that's we should see additional gains in commodity stocks. We also saw some financial reports today from J.P. Morgan and Wells Fargo.
Yeah, I'll get to those in a second, but I want to kind of just focus in more general terms. Out of the earnings that we've seen so far, you mentioned Alcoa, but what else have been some of the biggest surprises, perhaps some of the biggest losers, and maybe the biggest duds?
I think Yum Brands was probably the biggest dud. And that one's not really surprising and shouldn't have too big of an impact on our U.S. stock market. Yum has made a big push, especially with their KFC brand, into China over the past few years, and that hurt them this quarter. Their U.S. business looks fine. Taco Bell, KFC in the U.S., and Pizza Hut are going to do well. But in China, it's going to be very volatile. So what we're seeing here is confirmation that the U.S. is still the market leader in the current global environment, and investors should stay focused on the U.S., I believe.
Yeah, there has been a lot of talk about China as the hot spot, but as you mentioned there, maybe some signs of trouble, and there are other certainly problematic signs coming out of China as well. So, maybe a good idea to stay focused on the United States. Now, we talked about the banking sector a little bit. I want to delve into that a little bit more. We've had some numbers come back, places like Wells Fargo just announcing that their earnings per share jumped 13% in the last quarter. Of course, a different story over at J.P. Morgan, where the bank reported a rare third quarter loss. I think this is the first time Jamie Dimon has reported a loss in his tenure. And that was mostly due to legal costs out of this London whale scandal. This is going to have an impact, though, deeper for J.P. Morgan moving ahead, though, right? Should folks be concerned about J.P. Morgan?
J.P. Morgan said, Jamie Dimon was commenting that it's the legal issues that are weighing the firm down. And I think when you take all of that out, there's actually a gain on the earnings side. So the company's doing well, but they're having huge problems with regulators. Hopefully that'll be overcome, because in the long term, this regulatory push is going to hurt the next time we need a bailout. Wells Fargo is being beat up, and Bank of America are being beat up for acquisitions they made at basically the request of the government last time. So I don't think you're going to see anyone step up if this legal war continues much longer.
Yeah, another sign, I should say, of the impact that Washington can have on the financial markets, even if it's not directly tied to the performance of the business. So certainly something to keep an eye on there with those legal fees for J.P. Morgan. Back to more terms in a broader economy, a sense of the broader economy. What do you think will be the major takeaway from this earnings season? There's analysts out there that are predicting that the picture from the earnings period tells us really more about where we're going to be headed rather than what actually happened over the last 3 months. Do you think that's the case?
Yeah, I do. I think markets are going to look at this current report and start projecting what we'll see through the end of the year. I don't think the shutdown is going to have a major impact, but we should see double-digit earnings growth this quarter, and analysts are expecting about 11% year-over-year growth for the full year. In 2014, they're looking ahead already at 13% growth in the stocks that make up the S&P 500. It's well above average, and that should boost the stock market.
Now, for folks that tune into these types of segments, a lot of them are sophisticated investors. They know what they're talking about. But as we look at this shutdown in Washington and we look at the mainstream media and where they tend to focus their attention directly to see what type of impact things in Washington are having on Wall Street, everybody goes to the Dow Jones Industrial Average. But I know you like to look at the S&P 500. That's really a better gauge on where the economy is headed if you're going to look at a financial market. Is that correct?
Correct. All of the major indexes are highly correlated, which means they all move pretty much together almost all the time on a long-term basis. Day to day, there's a slight variation, but in the long term, we're fine. The Dow only has 30 companies. We don't get a good earnings read from the Dow. The S&P 500 with 500 different companies, 500 different sets of estimates, we get a good gauge of where the market and where the economy are.
Yeah, and some of those 30 companies in the Dow used to reflect more of the economy, a few years ago, maybe 10 or so years ago, than it does now, because a lot of things have changed with, some of these newer companies like Facebook that we see out there on the markets as well. Michael Carr, Chief Investment Strategist with Street Authority's Maximum Profit. It's been great to have you back with us, and we hope to talk to you again soon.
Thank you.
And thank you for watching Money News on Newsmax TV.